Today we kind of want to show you guys the difference in trading styles. I know for me personally, I'm someone that's very conservative. I like to lose small and win just a bit bigger. Jack, on the other hand, you're a bit different in the way, and it's something that I admire to and aspire to. Why don't you talk about it instead of me?
Yeah, so something that Huddie and I are constantly talking about over our 3, 4, 5-year friendship is the size of positions that we use. I'm often being very aggressive on certain setups, and Huddie's often very conservative.
And where this takes me is we both had a pretty good trade on BBBY just the other day. One of those really exceptional opportunities that does not come very often. And this is one of those opportunities that I would like to have size on. Like, I want to have size because I think the conviction's pretty high, because I think I'm familiar with the pattern. It's because I've been here before and I know the result like the back of my hand. And so, when I have winning trades, I also want to dissect the parts of it that I can improve upon. And something that I've done throughout my whole career, whether it's Jack or Dom or Kyle or Jack Schwarzy, I'm asking them about how they trade so I can add that into my repertoire, into my trading. So specifically with BBBY, I mean, this conversation's really going to boil down to sizing in. And I think it's a common question that most beginners get. The first thing I want to say is, in my opinion, I think size is overrated, especially in the beginning. It's a very dangerous tool. It's something that you have to earn the privilege to be able to use in order to get there in the first place. Something that I did very early on in my career is I disregarded the privilege and started using really big size after I made my first 100K. And I think that really mentally scarred me years back, into the point where I had to figure out very conservative and responsible ways to trade to not unleash that beast that actually was detrimental to my trading.
Yeah, I totally understand. And for me, it was more of a methodical thought process where I started using $100 risk, $200 risk, $500 risk, $1,000, $2,000, et cetera, until I've eventually worked into some positions where I'm risking $10, $20, $30,000. And it's always been a stage where maybe your style was you were risking a couple $100 and then next week you're risking 5,000, right? You kind of push that process really quickly. So that's something that I've noticed about your journey on the way up, but I don't always size into the best opportunities. Sometimes I make mistakes because I'll just size into a pattern that doesn't deserve it, but I think that you understand patterns and entries really well, and if you can learn to trust yourself to take bigger size on those A+ setups that all the boys agree on, then I think you could really maximize your profit potential in the stock market.
So let's boil this down to the exact independent scenario that just happened this last Friday on BBBY. I kind of want to talk about the way that I sized in, and again, why I didn't end up with super aggressive size. And maybe you have a comment to it, maybe you don't, but maybe someone else relates to this idea. The idea was, it was a first red day pattern, and I'm trying to short the bounce. And I already actually have size on this stock from the day before. I'm getting a good entry with smaller size and just being conservative about it. And as this trade starts working in my direction, it's definitely an opportunity. I think the setup is so good that I have all the time in the world to build into a nice cushiony size, right? And what transpired, if you guys can follow along, what had transpired is this stock pretty much dropped like a rock at market open. It went from a price point of $5.20 to a low of $4.20, and then started having this bounce back up into the resistance that we just came from. And that's usually going to be called a bounce short on a first red day, just kind of playing the range of the stock and the extreme volatility that it has on this day. Now, here's what my biggest issue was. It had this big crash from 5 to 420, and as it starts bouncing into the 470s, that VWAP area, I start taking my entry. I start taking that bounce short type entry. And I know in the moment, and this is the thing that I always struggle with, and I'm sure a lot of traders struggle with, I'm taking that entry on two reasons. One, I think that the bounce short is topping out, and I could be right or wrong about this. But two, I'm also looking for a really good risk reward opportunity where I can take a lot of size and have very little risk. And if I'm wrong, I can take that loss all day long. And one of my biggest problems is sizing in too soon. So in this case, I like to lose about $2,000 or $3,000 when I'm wrong on a good setup. So as the stock starts spiking into the 470s, that bounce off 420, I start taking shares. And I ended up with 6,000 shares from about 478, 480. And the idea was I'm risking 520. And in my mind, I don't know the exact amount, but in my mind, this is a roughly $2,000 to $3,000 loss if I have to take it over that level. Here's the problem though. The stock kept going against me. And as it was going against me and it got into the fives, I started noticing some very specific price action that's telling me that it's topping out, that it's conforming to trend, and that this is the moment where there's a huge pocket of liquidity and I want to get in with size. The problem I have in that moment is I'm already sized in for my max risk tolerance. I don't want to lose more than I've already kind of shot my shot. And now it's like there's this ideal moment at a better price, and I'm kind of a deer in headlights in this moment because it's like, how much risk am I really going to put on, and how am I going to feel at the end of the day if I lose because I had a bad entry to begin with?
Yeah, so a few points that I think would help is, one, you also have some size, like you said, from 550,
Yeah.
right? And if you stop that out at 520, you would still be in the profit.
True.
Which would then mitigate your risk if you ended up stopping out of your shares at 470.
True.
So think of your position in three parts. You have some from 550, some from 470, and then that 510 area is the most ideal position to put on, because that is where, is this gonna work or is this not gonna work? And that's what really gives me the conviction to size up, because I know that this is the price point now where the trade is going to prove to me if I'm right or wrong. There's no more guessing at 470. There's no more guessing at 550. It's that low fives area right where our risk is after it's proven a nice big morning panic with heavy sellers.
Yeah.
So the way that I played it is I didn't even have any short from the previous night, but I know Kyle Williams had some short, and he wasn't afraid to add because he has shares from a higher entry and he's averaging into his winner, which is what you kind of did too. But I think you didn't use that 550 as much as a cushion to really maximize your potential reward.
I was trading two different accounts, and I was trying to forget that initial entry worked. I had a different risk with that entry, and on my second account, I was sizing in for a day trade type of risk using the daily levels of the day. So that was kind of my mentality, but I totally understand where you're going with this.
Yeah, so it's just something to think about. And the way that I personally played it to maximize the trade is actually shorting at the open, knowing that the odds of this pulling 10, 15% at the open within the first 15 to 30 minutes are relatively high, at least 75%. And then once it pulls, I can then lock in my position and make 50 to 60, 70 cents off the open. And then when I'm shorting the bounce, essentially, if I'm short 10,000 shares from $5, but I've realized a $10,000 win, essentially I'm short from $6. If the trade goes against me, I'll end up losing all my profits at $6. And with the risk being 520, you're still going to be in the profit if you stop out for a loss. So it's just something to consider of using your realized gains to add risk to your position to potentially make more reward if the volatility continues to be fluid.
And that's something I actually didn't do very well. I have the same understanding as Jack that morning panic was going to come. And one of my issues, and maybe again this relates to someone out there, one of my issues was going into this trade using the references that I've seen in the past about bankruptcy bounces and stuff like that. I started the day with an inclination that, if this closed well, where I think it is going to close, I am going to swing this trade, meaning I don't want to cover a dime on this first red day. I want to get maximum profit potential. But what I learned very quickly is without locking in a piece and re-adding back to the core later, I had this, nervousness, this emotional gut-wrenching feeling that said, hey, this is a great play. I've been in it all day. I'm up 5-figure plus on it. If this turns around and I either lose or break even or make even, a couple thousand based off the magnitude of opportunity, I would be disgusted with myself. So it's very interesting to learn that side of it where it's like, yes, I had this swing idea. Yes, I'm confident on it. And it is working out even to this moment. But during the trade, I had tons of emotions just coming in and saying, if you are being greedy, if you're being cocky about the end result for whatever reason, if anything variable that I can't control happens, a press release comes out and it gets to new highs or whatever it is, I would feel really bad that I had never locked in because I was stubborn on my big picture thesis that this is going to gap down a second red day. And that mentality, although it is, it closed very weak and most likely maybe it has a, second red day. We're not actually at that point right now. But although it looks like I'm going to be right on that, I still feel like trading the volatility and re-adding back to a core position from a good average would have not only given me a better profit, but also helped with a lot of patience and sizing.
Yeah, and the thing is, when it did dip, when you were in from 470, you wanted to cover your shares at 420. Do you think that was because of some emotions that you were feeling while you hadn't locked any into the morning panic?
100%. And, and that was the swing position I always wanted, but then I felt like, man, to ignore this nice percent gain, this nice risk reward equation just feels like greed. and it feels irresponsible to some degree. So I learned a lot from that trade, even, and I learned these kinds of things when I talk to Jack or Dom or Kyle or Jack Schwarzy. They've always been my trading accountability buddies. We all started learning these patterns together from day one, trading with small size, and we've all kind of grown in our own ways and trade them in our own ways now. But the fundamentals and foundations of what we trade have always stayed the same. It's the exact same niche, but the personality and the trader is different. And that's something that I think all people need to realize about themselves, that your own personality is going to affect the way you trade. And learning from others, not about what they're trading, but about how they are trading, can help you uncover things about your trading that you can maybe improve for yourself. So thank you, Jack.
No problem. Keep at it.